Robert Schein is here, Chief Investment Officer at Blanke Schein Wealth Management. And we have a lot to discuss in the market and retail and how folks are feeling. Let's just start with some of the big picture here on the market. Your thoughts, because you have a price target that's higher than where we are now.
Much higher than where we are right now. There's a lot that could play out for next year. We believe that we're looking at strong corporate earnings. That's going to be fueled next year by additional rate cuts, probably in the back end of the next year. Because let's be honest, the data that we're getting, even tomorrow's CPI, is still clouded, right? We're getting data, but we're not getting clarity. So, but with that being said, you've got one big beautiful bill, a lot of consumer relief, if you will, on the tax side. So there's a lot of incentives that are going to make the market, we believe, in profits go
What
higher.
do you think are some of the catalysts to get us to the 7,000 mark, which you think we may even hit between now and the end of the year?
I think Santa Claus rally will continue, will be intact. I know it's not this week, but we'll see that shift. There's a sea change underneath, rotational market changing out of the AI, if you will, boom, from the Mag 7s to the market broadening out, which is a great thing, and that's what we need to see for next year.
You talked about some of the corporate earnings. You thought they were pretty strong. The expectations for next year, are they too high? I mean, because, that's the whole thing. When they have lowered expectations and they beat them versus, they start raising them, they do have some raised expectations for next year.
Yeah, we're on the high side for expectations, and that's simply because the last 2 years, Wall Street has been underestimating what happened in terms of a resurgence in earnings. And earnings growth, not only from the Mag 7, if you will, Nicole, but it's broadening out. We're seeing other sectors like financials and healthcare catch a bid. The only one hasn't is energy. So maybe even with the other 9 sectors, if you will, catching a bid in terms of earnings growth, that could be the catalyst.
So a name like NVIDIA you've owned for a long time. What's the strategy on NVIDIA right now?
So like I said before, with our clients, the conversation has been this. The last 5 years, we're up over 1,000%, if you will, right? 1,300%. We've been trimming basically every December. It's not the easiest conversation with a client, especially when you're booking cap gains, but it's the right strategy moving forward. Because can NVIDIA protect 60% profit margins moving forward? And what does the AI CapEx spend look like moving forward? The concern on Wall Street has to be, and we saw it play out with Oracle, is how are they going to, is it going to be financed? Right? The Mag 7s can play out and play this game because they have cash to buy the chips from NVIDIA. But if we start to see financing lining up to buy the chips from NVIDIA, that could be, and then there's all these other players that are going to come in to go after the 60% profit margins.
And we have the excitement of the H200 chips going to be allowed to go to China, to certain companies. I mean, that brought a little optimism, but the numbers that NVIDIA has put out during earnings season are sort of China. Maybe there could be a bright spot. Now, we also think about small caps. Is that an area that you like?
We like small caps, again, with the ease in the interest rate environment that always plays well to small caps. That was Wall Street's biggest play this year, starting in 2025, and it never really played out. So we could see that the theme from last year playing out into 2026. Small caps could see the bid that it's been long awaiting.
And then what about a name like Raytheon? Why does this fit in? I mean, we think about aerospace and defense.
We're very thematic when we think about investing for our clients, specifically on the defense side. So if you look at what the Wall Street and Washington are doing, follow the money. So there's a National Defense Act that's going through Congress right now, could be $900 billion. We'll see how it plays out. RTX is one of those that will play out in terms of gathering a lot of those contracts. So we want to follow the money, and that's one of the reasons why we like it.
Still on the AI revolution? Because I know you have Palo Alto in there, but where do we stand on the AI revolution? Are we still in the early part of it?
So yeah, we're in the early stages of AI play out. We like Palo Alto. Another theme that we like, Nicole, which is the cybersecurity theme. So as we go through this shift with the data center plays, the cloud computing plays, Palo Alto is a staple that every corporation needs, that protection in cybersecurity. So one of the reasons they just raised guidance 30% quarter over quarter in terms of profit margins, they're here to stay moving forward. So that's one of the reasons why we like the cybersecurity theme, and Palo Alto is right there with it.
So if you think 7,000 by the end of the year, I mean, when does 7,500 come, or 8,000?
That's anyone's guess, Nicole. That's a good one.
I mean, are you a believer that the rally continues in 2026?
Earlier, yes, the rally's going to continue in 2026, but there could be some fits and starts, right?
Right.
What does the Fed look like, the composition of the Federal Reserve, based upon who we get as the new chairman? But we believe it's going to be a dovish Fed moving forward. I think the data-dependent strategy for the Fed is really going to rely on where we see this market playing out and how quickly we can see 7,500.
Understood. I mean, when we think about the stock picks, is there a theme to these picks here at all? When you're trying to pick stocks versus the ones you might avoid?
Yeah, we love it. It's definitely a stock picker's market, Nicole. And so we like the themes that we said. So we love cybersecurity. We love the aerospace and defense names, if you will. But we're not, leaving AI by the wayside. We just say that, listen, 40% of Mag 7 is the S&P 500. Let's look for the market to broaden out. We need the market to broaden out next year,
right,
to see 7,500, even 8,000.
And there were so many fans of the money market, now not so much. What are your
money
thoughts?
market, the 10-year Treasury is at 4.15 today, so it's still stubbornly high based upon where we see the trajectory for next year. And watch the 10-year Treasury. So that could give the new Fed a run for their money. So the Fed vigilantes, the bond vigilantes, always give a new Fed chair, if you will, historically speaking, Nicole, a challenge. So that could be a story that we see in 2026. But let's be honest, the 8 trillion, 7.5 trillion in money markets, as interest rates drop, you're going to have to find better place for your money.
Robert Schein, thank you so much. Chief Investment Officer of Blanke Schein Wealth Management. Robert Schein, thank you. Great to see you.
Blanke Schein Wealth Management is a group of investment professionals registered with HighTower Services, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analysis, prices, or other information contained in this research is provided as general market commentary. It does not constitute investment advice. Blanke Schein Wealth Management and HighTower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Blanke Schein Wealth Management and do not represent those of HighTower Advisors, LLC, or any of its affiliates.